How much should you pay yourself as a business owner in South Africa? You know, you might think however much I want because I'm the boss. And while you do get to decide, there are a few things you may want to consider to ensure that you take care of both your financial needs and your business. Here's what we're going to cover in this episode. Firstly, we're going to look at the three most common mistakes business owners make when it comes to paying themselves. Then we're going to look at a simple method that will help you to calculate how much to pay yourself so that both your financial needs and your business's needs are met. And then we're also going to look at my owner's calculator that will help you to work out exactly how much you should pay yourself, how much you should pay for taxes and for a rainy day so that you can manage your business money with more confidence. Now, before we dig in, I work with service-based businesses, right? And the majority of business owners who come to me for help have either private companies, in other words, their business is registered as a PTY Limited, or they run their business as a sole proprietor. Now, we're not going to go into detail on the difference or the advantages or disadvantages of each of these type of businesses. But it is important to note that if your business is a private company or a PTY Limited, you actually have an opportunity to pay yourself twice. Once as an employee, and secondly, also through dividends, which is basically a share of the profits, right? Now, I have centered this episode around these two types of businesses. But that being said, it is going to be helpful for you regardless of the type of business that you're in. Now, also, please note that this is not meant to replace financial advice. I'm not a financial advisor. I'm also not an accountant. So if you're unsure what type of business structure is right for you, it's a great idea to speak to an accountant and to do your own due diligence. Now, here is why it is important to understand how much you should be paying yourself and how this is going to be helpful for you today. Firstly, it's going to help you to take control of your business finances and help you to pay yourself a consistent monthly salary out of your business. It's also going to help you to never run out of cash because let's face it, cash is queen, right? It's also going to help you create a reserve of funds so that you are saving for the future of your business, which means you can fund your business's growth and expansion or just have a really nice cash cushion that will help you for those life happens moments. Now, we're going to start with the most common mistakes or the pitfalls that business owners face when it comes to compensating themselves for the work they do in their business. Most business owners, or many business owners rather, don't pay themselves consistently, right? And there are a few reasons why you might not be paying yourself consistently from your business right now. But the biggest culprit that I see with my clients is that they pay themselves last. In other words, they pay themselves whatever is left after they've paid everything and everyone else. Now, you have to shift this mindset and pay yourself first. You, as the business owner, are taking a ton of risk, and it's important to take care of your personal financial needs. If you don't pay yourself consistently, you should ask yourself why. If you had a team member or have a team member that is working hard and supports your business's growth consistently month over month, would you be okay with not paying them consistently? The question is, if you're not paying yourself consistently, why would you do that to yourself? Because I bet that you're showing up consistently, right? Now, a book that has really helped me to understand the importance of paying myself first is the book Profit First by Mike Michalowicz. Now, if you're a business owner, get this book. It's going to change the way you think and manage money inside your business. Now, I teach this concept of profit first to all of my clients, and I use it in every business I own. Once a week, I have a money date with my business, and I distribute all the income that came in that week into 4 different accounts that are set up within my main business account, which is at F&B. Now, here's how I distribute my revenue inside of my coaching business. I take 10% of the revenue and put that into a profit or cash reserves account, which is a high yield savings account. 25% goes into my owner's compensation account, and this is from where I'm going to pay my salary at the end of the month. 30% goes into another high yield savings account for taxes, and the remaining 35% goes towards my operating expenses. Now, the profit account is reviewed once a quarter, and a portion of it is distributed as dividends, and the rest is retained for cash reserves so that there is always a cash cushion inside of the business. This is really important. Now, when it comes to taxes, I like having more saved for taxes than I might need. Rather than not having enough comes tax season, right? I'm going to share how to calculate how much you should pay yourself in a minute. But the important thing here is to really just commit yourself to paying yourself a consistent amount every month, even when the business's revenue fluctuates. This is what makes these different accounts so valuable, because on the months that my business brings in more revenue, I'm also putting more aside, which means I have more money saved up for those months where revenue might be down a bit, right? So I can still pay myself a consistent number. Also, something happens to us psychologically when we pay ourselves from our businesses consistently. It's almost like we take ourselves and the business a little bit more seriously. The second mistake or pitfall I see is that business owners aren't paying themselves enough, right? So what is enough? Enough is obviously not going to be the same for everyone. The type of business you have, your business model, whether you have employees, these things are all going to factor into how much you should pay yourself. What I typically see is that business owners don't pay themselves enough because they actually don't have a grip on their expenses. They don't often realize how much they are actually spending inside of the business. They aren't tracking or measuring their numbers. And as a result, their expenses are way higher than they should be. Now, if your expenses are too high, there won't be enough to actually pay yourself, right? So we want to keep our business expenses as low as possible. Check in on your expenses regularly. I actually go through my expenses every quarter, line by line, to make sure that the software, the subscriptions, and everything else that is flowing out of my business is still actually in line with my goals. Now, it is important to have a budget for your business and to look at your actual income and expenses as well. Now, every time I sit down to crunch some numbers with my clients, we almost always find money inside the business that can be allocated towards compensating themselves on a consistent basis. The key here, I guess, is to not trust your gut when it comes to the numbers inside of your business. Measure and track them. Something else that you can also consider as you decide what you need to pay yourself is to look at what it would cost to replace your skill set within your business. Now, ideally, you want to pay yourself at least as much as it would cost to hire someone to do what you do, right? Even if you aren't planning on replacing yourself in your business anytime soon. The third pitfall is paying yourself too much. Now, when are you paying yourself too much? Well, before we can answer that question, we need to look at how much you should be paying yourself from your business. So here's the formula. You want to pay yourself 25 to 30% of your real revenue, right? That is your top line revenue minus any direct costs or costs of goods sold, as we call it on the profit and loss statement. If there aren't any expenses as a result of the services delivered, then you would use your top line revenue number. Now, you also want to put a portion of your real revenue aside for taxes and as cash reserves inside of the business. The ideal split might look different for your business, and I do suggest that you sit down with your accountant to determine what would be the best split for you specifically. But typically, this is what I recommend for my clients who own service-based businesses. 5 to 10% goes into the profit or cash reserves account. 25 to 30% goes into the owner's compensation account. 30% goes into the tax account, and 30 to 40% goes towards expenses. Now, paying yourself too much means that you're taking out more than the recommended 30%, and you have no savings for taxes and no savings for a rainy day or no money or cash reserves inside of the business. I do suggest having 2 high yield savings accounts inside of your business account I actually, as I said, bank with FNB, and I use their 48-hour notice accounts for my taxes and my profit or cash reserves. So the 30% of revenue I put aside for taxes and the 10% that I save for profit or cash reserves goes into those high yield savings accounts, which gives me a little bit of a higher return on my funds than I would receive in a normal savings account. But it's also quick and easy to access when I do need the money, but it's not that easy as just simply transferring funds immediately because there is that 48-hour time delay. And that actually helps me to not make impulsive decisions with that cash. The bottom line is if you are taking everything out of the business and there are no extra funds for the winter months or those unexpected expenses, or when taxes are due, which might not be unexpected, right? But we always hope that SARS doesn't want to take any money from us. It will put you in a difficult financial position, right? And you will need to maybe borrow money or dig into your cash flow to get out of that sticky situation, which can cause a lot of unnecessary stress and anxiety. So here are a few extra tips to help you manage your business finances better. Firstly, treat your business as a separate entity. You are not your business. Your business money isn't your money. Even if you're running your business as a sole proprietor and SARS does see your revenue or the business revenue as your personal income, you need to still keep your business money separate from your personal money. When you don't view your business's money as your money, but rather see yourself as the custodian of that money, then you will treat it differently. You have a responsibility to take care of that money and to do it well. Secondly, reduce your expenses and get your compensation number in that 25 to 30% range. This might mean that you need to increase how much you're paying yourself. It might mean you need to reduce how much you're paying yourself. Remember, you don't want to take out all of the money that is left in your business. We need to build a nice cash cushion inside the business so that we have a buffer for those unexpected moments. And it's always a savvy move to keep your expenses as low as possible. So go through them line by line and cut anything that isn't absolutely necessary. Number 3, increase your revenue without increasing how much you pay yourself. Now, if you're paying yourself too much and you can't pay yourself less because maybe you have personal debt or you just can't live on less, then you need to increase your revenue, right? And then as you increase your revenue, don't pay yourself more. Just because the business is making more money does not always mean that you should get paid more. Number 4, start putting funds away for taxes and savings. If you don't have any money saved for cash reserves or taxes, start by putting 1% of your real revenue into 2 high-yield savings accounts every month and don't touch it. Track your numbers and increase that 1% every quarter until you're in line with your own ideal split. I have created a very simple calculator that you can use to determine exactly how much you need to save for taxes, cash reserves, and pay yourself. It's also going to show you where you're falling within those guided percentages that I discussed previously. Remember, a small shift in the right direction is all you need to get started on a more secure financial future for yourself and your business. You can grab that calculator at ilonkaras.com/salary calculator. The link is also in the show notes. Thank you so much for tuning into this week's episode. I hope you have an amazing day. I will see you again next week.